Good afternoon, traders and investors. Will back here with another one. Hope everybody's doing well. Coming to you with a Thursday market update. So in today's markets, they continued to move higher, most notably in SPY, as market breadth today was very good, but tech is getting a little bit overbought on a lot of the short-term indicators, and Tesla leading tech to the downside today. So in today's recap, we're going to go over our major indexes, of course, going to go over our major tech names, see what's happening with Tesla, and go over two earnings reports that we have prepared for you guys. Number one is going to be Intel, and number two is going to be Visa. So very curious to see what they have to offer. So without further ado, guys, let's get right into today's video. So SPY up 0.54%. QQQ kind of lagging on the day, 0.12%. They were actually red on the day for a certain portion of the day. XLF and XLV, though, putting in some steady gains. If you take a look at the heat map, you will see that most of everything was in the green, with the bottom half of the market, which was very, very red yesterday, coming back and showing signs of life today. Tesla, very big loss leader on the day after their earnings, of course, and financials and healthcare performing relatively well. If you take a look, guys, on the year-to-date performance. So here's your year-to-date performance. Tesla, only in this month, guys, 26.5% to the downside. Obviously, cyclicality playing a big portion of that, as we went over their earnings call yesterday. Really sensitive to interest rates. And I will reiterate, Tesla will not have a beautiful recovery story in terms of EPS and margins, which translates into increased share prices until interest rates start coming down, in my opinion. But as a whole, right, the rest of big tech performing fairly well to start off the year. So before we get into our technical analysis of our major indexes, let us get into two earnings report, and let's start it off with Intel. So Intel here, guys, dropping pretty much 10% in the after hours. You can see this nasty candle right here, almost down 10, 11% in the after hours. So what exactly happened with their earnings, guys? Well, they had a double beat, but missed heavily on guidance for the next quarter. So EPS for the current quarter comes in 21% beat, very solid beat. Revenue for the quarter comes in at 1.5% to the upside, so slight beat on that. Intel stock has recovered very nicely over the course of the year, running to a very solid area of resistance, however. Pretty much $50 all the way down to about $45 is a very, very big area of resistance for Intel. It acted as support for the company for a very long time in the past, as you can see back here in 2020 and 2021. Can pull this all the way back here. But now, companies struggling to maintain that range. And with the after hours drop right now, trading about $44, you can see that we've now failed this area and now trading a bit below it. So what exactly happened to Intel? We're going to deep dive. And if you guys remember from our last couple quarterly earnings, I really don't like how this company is currently positioned. So let's get into the earnings headlines as a whole. Intel stock sinks as early 2024 outlook comes up short. So Intel, a quick recap, if you don't know what happened to the stock, 2022, they ran into a bunch of supply chain issues and also started investing heavily in the new AI trend. That cost them a lot of money from their bottom line, and EPS has basically fallen off a cliff in the last few years. If you take a look here at your EPS, let's just pull it up on the chart right here. Give me the earnings tab. You can see the net drop in EPS 2021, 2022, and even this year, very, very shallow EPS compared to what they did have, and also drops in revenue in comparison with pretty much anywhere before the pandemic and the few years of the pandemic. This has been the story for Intel. It's been completely a disaster in terms of their EPS. It's really hurt margins a lot, and that's what's hurt investor confidence as well. So let's take a look what they said in their earnings report here. Intel issued an outlook for the first quarter of 2024 that lagged analyst estimates. So even though they had a solid beat on the quarter this quarter, it was really the estimates that came in fairly low. Take a look at these estimates right here. For the first quarter of fiscal 2024, Intel expects earnings per share of 13 cents on between 12 and 13 billion in sales versus the expectations of 33 cents per share. So this is basically a miss on expectations for next quarter of roughly 60%. That's a very heavy miss in terms of guidance, and also a little bit of 10% miss on their revenue as well. They're supposed to bring in about 14.15 billion in revenue, and they're only going to be bringing in between 12 and 13. So almost, anywhere between 7-10% miss on revenue. And then you have a 60% miss on EPS guidance as well. not very good at all. So take a look. We're not going to read most of the article here. I want to show you the main thing that has been plaguing Intel, and it continues to plague Intel. Intel's currently on a recovery story trajectory as they continue to try and manage costs better to get that EPS up, but the revenues have been steadily declining as other competitors continue to gain market share, such as TSM. Intel is still the #1 revenue generator in terms of semiconductor manufacturing and processor units. However, the competition is starting to be fierce. And with the fact that now NVIDIA and AMD are replacing the need for CPUs as a whole by just offering centralized GPU processing power, well, that's what's hitting Intel as well. So take a look. I want to show you guys the net income of this company. This is your 2023 from the Intel website, full income right here. Revenue, $54.2 billion. Net income, only $1.7 billion. Now, they did bring in a hefty quarter on the quarter this year. They brought in pretty much $4.4 billion in the last quarter right here. However, the thing that I want to show you guys, right, in the quarter, you can see that they bring in about $2.3 billion. The net income is because they had a first quarter of negative net income. So it really hurt their net income for the year. And you can see this profit margin on the year, guys, 1.7 divided by 54.2, profit margin 3% for a company like Intel generating over $50 billion. That is simply just unacceptable. And they did have very negative free cash flow as well. So take a look at this, guys, right? I want to bring you down to the business units first. We'll tackle that. So Intel, the story of last quarterly earnings was that a lot of their business units were in decline, and that has unfortunately not changed. So take a look at this, guys. Their client computing group, which is their largest segment now, versus their Q4 2022, which is about a year ago, they're up 33%. However, as a whole on the year, they're down 8%. And this just continues. Their data center and AI division down 10% on a quarter-over-quarter basis here. And on the year, down 20% as a whole. Network and edge down 31% on the year as a whole. Mobileye up 11%, but it's such a small segment of revenue for them. They only bring in about $2.1 billion for the year from that. So that's kind of a non-factor for them. You really need to see an increase in these three top components. And then their Intel Foundry services, which they're trying to do to compete with companies like NVIDIA and AMD. They're up to about $950 million for the year, up 103%, but still representing such a small portion of their total revenue that it's not really even worth to talk about at this point, okay? And now let's get down to the kicker for me, which is going to be their free cash flow. Take a look at this adjusted free cash flow for the year. You guys will see that we're going to take this one, the 12 months ended. Whoops, my head's in the way. So we're going to take the 12 months ended right here, ending free cash flow for the company. And you will see it's not good, guys. $12 billion to the negative in terms of adjusted free cash flow. That's just not going to cut it. This company, in terms of their financials, is just not set up very well, in my opinion. Even though their share price has come up a lot on investor confidence, I just don't buy it personally, guys. Intel would be a decent buy for me if we're under maybe $45 all the way down to roughly your $33, $34 range. That is when I would potentially try to place some puts on it. But up here, it's just not worth the value proposition, in my opinion. You can see that over the past year, they had really negative net income for a lot of it, declining revenues, and it just continues. If I show you guys their balance sheet, it's just not good. This is just not a company that's set up well for the next couple of years. You will see here that they have a lot of debt. They were coming into this year with a lot of debt. Last year, once again, negative free cash flow. This year, again, negative free cash flow, another $12 billion. And quarter over quarter is not much better. You can see that they do have positive cash and cash equivalents on their balance sheet, but they keep losing money every single quarter, almost every single quarter, right? And just their free cash flow is just not there. It's not going to be enough to pay down all of this long-term debt, $49 billion in long-term debt. That is just not good enough for me, guys. When the company's not generating free cash flow, not generating margins, how are they going to pay down this debt and get their balance sheet upright? And how are they going to increase EPS if it's not coming from cost savings, right? So that's what you want to see. You want to see a boost in EPS really by their capacity to increase revenue substantially. and lower their cost of goods sold, but they just have not been able to do that, not able to lower their cost of goods sold high enough, not able to also lower their administrative expenses. And you can see the EPS will not recover to pre-pandemic levels for the next 4 years potentially. And even on the revenue segment, you'll see that 2024 revenue is expected to come up, yes, about 10%, but really not getting back to 2020 and 2021 levels, even 2019 levels, guys, all the way through 2026. That's why for me personally, Intel is just not a stock that I'm looking for. If you want a semiconductor play and a chip play, the best one, you have to go with the industry leader, and it's TSM. Intel currently at its current share price is trading for roughly, well, you can't see it here because one of their quarters were negative, but I calculated it earlier. They're trading at about a 44 price to earnings if we take into account their most recent earnings. And if you take a look at the industry leader, guys, TSM, whose earnings we just covered the other day, they're trading at a PE ratio of 22 with far better financials. So you may as well just pick a company like TSM instead of going for Intel's recovery story, in my opinion. So that's just the gist of things for earnings. I mean, their earnings, they were decent for the quarter, but lowered guidance. Their balance sheet is not very good at all. And I just don't see the growth for the company coming back for the next 2-3 years, at least not in the same ratio that the rest of the semiconductor space is going to put out. Now, let's cover the second company, guys. We're going to go over Visa. So Visa, one of my favorite stocks in the entire market. We played it a bunch when it was in the lower 200s all the way down to 190 over the course of the past year and a half. But now it's kind of running a little bit away from us. On the weekly, you'll see that we're a tiny little bit overbought right here. Visa for me would be a buy, anything pretty much under 250 at this point, your previous all-time high, for a little breakout or retest of this previous all-time high right there. A little bit too high for me, but they did outstanding on earnings. Even if they had a little bit of a drop in the after hours after earnings here, 3.34%. The company has run up a ton ever since that November rally, really getting overbought on the daily time frame as well. So anything other than a massive surprise would have potentially been met with a bit of selling, and that's exactly what we got. But the company is set up extremely well. Take a look at this earnings, guys. 3% on beat on EPS, 1% beat on revenue. And this is a company that just continues to generate money hand over face. Take a look at these net margins for 2023 as a whole, 52%, always in the roughly high 40s, low 50% net margin rate, even on a quarter over quarter basis, right? Continuously increasing revenues, continuously increasing margins, and continuously increasing free cash flow, which is one of my favorite metrics. You'll see that their EPS estimate over the next couple of years is still growing at pretty much double-digit rate, and their revenue is also growing fairly good as well, about 9-10% as well. Very solid company, just a little bit too rich for me, currently trading roughly at about a 33 price to earnings ratio, which is in relation to Visa's history, right? Let's pull up the price to earnings ratio. It's this bottom chart right here. So they're trading at about a 33. As of currently right now. They do get as high as in the 40s and maybe even in the 50s back when they were really rallying in 2020 and 2021. So their PE ratio is about average at this point in time, but I just feel that the chart has run a little bit too much on a technical basis. I will be looking for a pullback to maybe play this company. But as a whole, guys, Visa's earnings so good. Visa reports 9% revenue growth and robust earnings in Q1 2024. So their net revenue is $8.6 billion. 9% increase, both nominal and constant dollar basis. GAAP net income, almost $5 billion, increase of 17% year over year. So they continue to grow their bottom line, which is exactly what you want to see. EPS growth, 20% growth, guys. Absolutely amazing. GAAP EPS growth, 20% on a year over year basis. Very nice. Payments volume grew by 8%. Very good here. Processed transactions increased by 9% as well. So not only do they have more volume, but they also have more transactions as a whole. And share repurchases and dividends just continue. Visa returned $4.4 billion to shareholders through repurchases and dividends. Nothing wrong with this earnings report. Their earnings report is absolutely bulletproof at this point. And what they did really well is not only did they increase revenues across all of their lines of business, you can see that, they also increased their net revenue by 9%, which was the headline in the article, but they decreased their operating expenses across the board by about 6%. So once again, the operating leverage coming in for Visa, where Visa maintains relatively fixed costs, but is able to expand the revenue, just increasing margins, increasing free cash flow. And look, at the end of the quarter, they added another $3.3 billion of free cash flow to the bottom line. Absolutely amazing. Share repurchases over the quarter as well, about $3.3 billion. So really utilizing the cash flow that they make and just returning that to the shareholder. This is what you want to see in any given company, guys. A company that just generates free cash flow, hand over fist, that doesn't have a lot of long-term debt in the balance sheet as well, and that just continues to give money back to their shareholders. You can see that right down in this bottom left corner. They don't have a lot of long-term debt in terms of their free cash flow that they generate on a quarter-over-quarter basis, and their cash and cash equivalents. Cash equivalents at the end of last quarter was sitting around 19 billion. And if you take a look at what they just gave in this quarter at the top of the slide right here, cash and cash equivalents now were 21.4 billion. So they just continuously increase their cash reserves quarter over quarter while buying back a lot of shares, while paying dividends, really utilizing that free cash flow that they generate every single quarter in a good way, and even have some left over to build this cash pile further. So tremendous earnings from Visa, no red flags, and they actually said that they were fairly bullish in terms of consumers being resilient in that aspect. So very, very good report by Visa indeed, in contrast to the Intel one that we just went over. Now, let's get into our major technical analysis here of your indexes. So SPY just continues its daily uptrend to the upside. Still no loss of the lower time frames. We were saying in yesterday's video, if you set an hourly downtrend into today, your daily move will be topped out, and we're just going to be looking for a daily higher low. Anything above 470 at that point, we'll just be looking for a daily higher low. But the bulls have not lost the lower time frame, so still just looking for this move to continue until we lose those lower time frames. And then when we do, looking for a daily higher low, anything above pretty much 470. Next week's going to be huge for earnings and Jerome Powell on Wednesday, so we'll see what happens with that. But all in all, guys, very bullish on SPY. On the weekly as well, you can see beautiful weekly uptrend simply continues at this point, and now so much space on the weekly. So let's say next week tech earnings fall below expectations and maybe Jerome Powell is a bit hawkish. If we do set a daily downtrend at that point on SPY for a little bit of a pullback, anything on the weekly above 466 just for a weekly higher low, and target now at this point your previous all-time highs, which is going to be 473 all the way up to about 480. This little pocket right here should be a beautiful area that the bulls can now use as current support. Now moving on to QQQ. QQ looking decent, but couple little red flags. So here you go. SPY getting a little bit overbought currently. QQQ even more overbought. But the thing on QQQ today that happened was they actually lost the hourly trend. And you can see that best on the chart of the futures right now, as the hourly downtrend simply continues into the after hours. So QQQ potentially setting your top of the market yesterday and potentially due for a little bit of daily consolidation. This would not be surprising. Potentially a few days of daily consolidation until big tech earnings and Jerome Powell next week. At that point, we can either get a confirmed continuation of the daily uptrend, or we may just get a confirmed daily downtrend at that point. But one thing's for sure, bears are taking short-term control of these time frames right here. 4 hour, also in the after hours, currently losing your 12 EMA. So we'll see what happens with that tomorrow. If they do set the 4 hour downtrend into the morning hours of trading, we will be looking for just a daily consolidation pullback here. Anything above 403.44, looking for a daily higher low for potential trend continuation. But next week is so big, guys, that it can go either way. If it does go to the downside, however, same thing as SPY, still tons of space on the weekly, guys, right? Anything above 395.83, just looking for a weekly higher low. If ever we lose the daily uptrend, set a daily downtrend, just looking for a weekly pullback, weekly higher low. And at that point, guys, I'm targeting your 12 EMA right here, the sweet spot 405 down to about 385, huge previous area of all-time high resistance, which will now be acting as great support for the markets, in my opinion. Now moving on to XLF, and I also took a little bit of a cheeky short at the top end of the levels here today, which we'll discuss in tomorrow's portfolio review to wrap up the end of the week. Now, XLF financials, we are going to be looking for the bulls to potentially just continue this upswing right here. No loss of your short-term time frames. Bulls still in control of the hourly, which means your daily trend just continues until we lose those. So just keep an eye on this, guys. Now we're setting a lot of space, creating a lot of space above 37. So any pullback at this point, looking for a daily higher low for potential trend continuation. If QQQ takes a little bit of time to breathe, need to see XLF and XLV really hold up their end of the market over the course of the next week if big tech decides to take a little bit of breather. And the reason that I think big tech could take a little bit of a breather, guys, is a lot of your big tech stocks that we cover on our list down below that we'll do soon are getting a little bit overbought on the daily time frame. So maybe it should be time for QQQ to take a little bit of a breather while the rest of the market tends to make up for it. So on XLF Financial specifically, look at this area right here, $38 all the way down about $37.50. This big chop zone that we previously took about a month to get through, right, should be acting as fairly decent support. If we do pull back into there, you also have your moving averages acting as your support as well. So keep an eye, guys. If we ever do top out, pull back into this area, 38 all the way down to 37.50 should be a very juicy area to retest potentially. And the weekly uptrend at this point is just very, very nicely in motion. We're only on leg number 2 right now of your weekly move. So this is why I do believe that the bulls are set up very beautifully to set a daily higher low for further daily trend continuation, which will just push this weekly trend ever so slightly higher. So looking good on financials. Now moving on to healthcare. Healthcare, after such a negative day here today, setting a lower low today. So daily downtrend at this point is confirmed by your bears. That's what we were looking out for yesterday. Flush of this low right here, 137.63. So daily downtrend in motion by the bears. Now remains to be seen how high can the bulls bounce in relation to 140.68. They bounce a tremendous amount. 50, 60, 70, 80%. They set themselves up nicely to reverse this into a new daily uptrend. But if you just set the lower high down here before rolling over on the lower time frames on the 1 hour here, right? So 1 hour, bulls looking to engulf, recapture. But if they fail and set the hourly downtrend once more, we will just be setting lower high, lower low, just daily downtrend continuation. And this is fine. This is one of our expected scenarios. The daily downtrend currently, just beautiful weekly consolidation. To weekly consolidation after 10, 11 weeks of green. Keep an eye, guys. 137 all the way down to about 133 should be your big area of support. Big area of resistance in the past. Moving averages are here now. This area should be acting as juicy support, potentially just due for a breakout of this zone, a retest of the zone before future increases into Q2 of 2024. And then obviously we do have our previous all-time highs as resistance. That's why we're not able to break through. So bulls may just need a little bit of time to pull back, accumulate more positions before another stab at your all-time highs. And now IWM Russell, still battling here, guys. IWM Russell putting up a fight. So daily downtrend was confirmed. Engulfing move by the bulls. Now we're looking for the bulls to set the daily higher low for potential daily trend reversal. So we were looking, when is this move gonna be topped out? When they lose the hourly time frame. So they lost the hourly time frame into yesterday, but now trying desperately to recapture that. So we'll see what happens tomorrow. If they're able to recapture the hourly uptrend into tomorrow, well, at that point, your daily higher low is set right here with yesterday's low, 194.50-ish. And then we're just going to be looking to create the daily uptrend. That would be a crack of your previous highs, 198.31 for a recapture of your daily uptrend, which means that your weekly higher low would be set at that level right here. And then we're going to try to take a second stab at your previous 52-week high all the way up here. But Russell looking fairly decent, but this play is going to be highly sensitive to what Jerome Powell has to say next Wednesday when he comes out with the interest rate statement for January and potentially interest rate guidance for the next quarter or two. So keep an eye on the Russell, extremely interest rate sensitive sector. This could go either way. Bulls could confirm the uptrend, start retesting these highs, but if it goes bad with Jerome Powell, all of that could just come undone. And if we do trend lower, guys, if we do trend lower right here and potentially just start retrending back into this area right here, I'm a buyer of the Russell. 187 down to about 180 is my sweet spot. So keep an eye out for that zone. And now lastly, your Dow Jones. Dow Jones performing better than most here today, right? Trying to reset the daily uptrend right here. So after having lost the daily uptrend, daily downtrend by the bears, engulfing move by the bulls, just looking for a daily higher low for further trend continuation. And they haven't cracked the highs just yet, so we can't say that the daily trend is confirmed, but it's really looking good in terms of that, right? So loss of the hourly, now recapture of the hourly trend right here by your bulls, double bottom, recapture higher high on the hourly. So we'll see, can they maintain this hourly uptrend into tomorrow? If they do, they will just have made a new daily uptrend into further all-time high territory. Everything looking very good for the bulls. On the weekly, everything looking extremely good as well after this such a beautiful 10, 11 week or maybe 8, 9 week rally on the Dow Jones. 3 weeks of sideways pullback at the high of your move, which is best case scenario for any bulls out there. Just now, weekly trend continuation to the upside. Beautiful move by the Dow Jones as a whole. Nothing bad to say, no red flags at all. Now let's move down to our big tech names. So Apple, pulling back a little bit on the day here today. So Apple, after such a nice bounce off the lows here, in for a little bit of daily consolidation. And we saw that yesterday when the bulls really lost this hourly time frame. We were looking, can the bears set the hourly downtrend. Well, they did ever so slightly. They failed at the previous highs and they did tap the lows just ever so slightly. It's not the cleanest hourly downtrend, but it is hourly downtrend confirmed. So if they do continue this hourly downtrend into tomorrow, we are just looking for continued daily consolidation. It will be daily consolidation as long as your bears control this hourly. So daily consolidation just underway, just looking for a daily higher low, anything pretty much above 180.5. Looking for a daily higher low for potential further trend continuation. I highlighted this spot on Apple yesterday. We're talking about 190 all the way down to about the 188 range. Really good previous support in this area right here. It is also an area where your moving averages are currently sitting. So I wouldn't be surprised if Apple does come down. This could be a likely area for them. They do have earnings next Thursday, so that will be very pivotal for them to either break their all-time highs or potentially come back and start retesting some of these lower levels. If Apple, for any which reason, after earnings has a bad time and comes back down in the lower 80s, lower 180s, I will be playing Apple again. And obviously earnings could just propulse them to a new all-time high, which would just really reset the weekly uptrend in motion right here. So Apple kind of currently trapped right now between two levels, right? In my opinion, before our earnings, we're not really going to get much price action in terms of either a break of your lows down here. That would be very surprising, but also will be very surprising would be a break of your all-time highs without much significant news before earnings. So we'll see what happens next Thursday on earnings. But as of now, the daily bulls have recaptured the uptrend, just looking for a daily higher low for potential continuation to the upside. So looking decent on Apple. Now moving on to AMD. AMD, new all-time high yet again today, so moved all the way up to about 185-ish and then pulling down ever so slightly. AMD is just in an absolutely beautiful uptrend right now. It has been an uptrend for a very long time currently, ever since November, but now really breaking up to the upside. AMD getting slightly overbought. Apple wasn't overbought because of how much it dropped, obviously, but a lot of your tech down here that we'll go through, you'll see, guys, overbought conditions are getting frequent. So AMD slightly overbought currently, but daily bulls are still in full control until we lose this hourly trend right here. The bulls are still in control and we're kind of starting to lose it. This is after hours move, so I'm not going to include it right now. You'll see AMD down currently 3% in the after hours, but we'll see how that opens tomorrow. If it opens tomorrow red down here, you will have a confirmed loss of your hourly time frame. At that point, daily consolidation will be underway. Then we're looking for a daily higher low, anything pretty much above 163.86 for that higher low for potential further trend continuation. But after three beautiful daily legs up, usually that symbolizes that you're in for potentially a bit of consolidation. If we do get more extended daily consolidation, maybe daily downtrend into next week, that's fine, guys. The weekly is looking very healthy, right? 3 legs up on the weekly. Any move down on the weekly just for a weekly higher low, anything above 134. So the bulls with so much space, and they've created so much space above your previous all-time highs that the next likely area where we might be able to pull back into is your previous all-time highs. Talking about 164 all the way down to about 158 would be the zone to watch for AMD. So looking very good. Bulls still in control, but just watch out for tomorrow if we lose those short-term timeframes and for a little bit of a consolidation. Now moving on to Amazon. Amazon performing fairly well on today here, guys. Today, right, 0.56% to the upside. So daily uptrend simply is resumed by Amazon at this point. No red flags whatsoever. Any pullback, we're just looking for a daily higher low, anything above 150-ish, right? For daily higher low for further trend continuation. Amazon never really losing the hourly trend in a significant fashion, right? They tried to lose it back here, but the bulls came right back. This is an intraday recovery. So for the bears really to be in control, you need to see them control the hourly for at least 2 days for an extended daily pullback. Now bulls creating a lot of space off of your lows, the 150 level, all the way up to about 157, 158. So bulls looking very, very healthy, set up nicely for earnings next week, same day as Apple, next Thursday. So I don't believe we're going to get some massive moves to the upside by Amazon much before earnings, but earnings could send us in one or two directions. We're either going to start retesting your areas of big support down here after earnings, if earnings are bad, talking about 148 all the way down to about 140. That will be a zone that I'm heavily looking to play Amazon if ever we do come back there. It is your weekly higher low levels. I do believe there's a lot of support in this zone as of recently, and also you can see in the past, so should be a good area. But to the upside, if earnings have a very nice beat, well guys, we are going between 166 and about 170 to the upside. That's the next area of resistance for Amazon. So everything looking good for the company. Now moving on to Google. So Google, guys, having a very nice day. One of the best days in tech with Netflix up 2.19% and Google today breaking the all-time highs. So looking good, but getting a little bit overbought. Amazon, we didn't see overbought conditions, but Google is going to be your second stock with a little bit of overbought conditions. And that's why I do believe that tech may be in for a little bit of a pullback. So Google getting slightly overbought. They do have earnings next Tuesday, so we'll see how they deal with that. But as of now, everything looking very good on Google, guys, right? Daily uptrend confirmed, tons of space off the lows at this point, right? So anything above 140.62, as soon as this move tops out, how does it top out? Loss of your hourly time frame. Once again, soon as this move tops out, looking for a daily higher low, anything above your previous low right here. So bulls in full control of your daily uptrend right now. Bulls also in full control of the weekly uptrend, anything above pretty much 137. Just looking for a weekly higher low if ever earnings are for some reason bad, which I'm not expecting. And Google has a nice 6% drop, which brings us back, right? 5-6% from current levels. Let's say that's about roughly a 142 level. That will open up these strikes in the $140, $138 range, which is the range that I really want to play Google, if it does come back there. So now currently slightly above the all-time highs, guys. I'm not saying we're high enough to use this whole previous area as support, right? So what you'd want to see is the breakout and then retest this. They would need to get as high about as 160 and then be able to sit back on this current area right now, 151, 152, and use it as support. Just not significantly above it right now to say that they can use previous all-time highs as support. But Google doing a great job today. No red flags as of yet, just slightly getting a bit overbought. Now Meta as well getting a slightly bit overbought on the daily time frame here after such a beautiful last couple of weeks of rally. May just be time for Meta to consolidate. Meta almost at the all-time highs. Yesterday was all-time highs, but not all-time highs, just, actually all-time highs. I'm confusing this one with the previous one. Sorry about that, guys. So current all-time highs for Meta still struggling. 400 will be the psychological area of resistance. The same thing was that level for Microsoft just the other day, and they smashed through it. But Meta looking good despite being slightly overbought. No red flags on the daily, right? Daily uptrend confirmed. Still no loss of your lower time frames of the hourly, right? So any significant loss of your hourly time frame would just be daily consolidation, anything above 359.50-ish, just for a daily higher low for further trend continuation. Meta as well with earnings next week on Thursday. Such a big week next week, guys. And on the weekly, everything looking very good. So if ever earnings are just a disaster for some reason and we start setting up for a daily downtrend, tons of space on the weekly, anything above 341.41, just for a weekly pullback for further trend continuation of the upside. And Meta can still pull back at this point, guys. They can pull back, 12, 13%. And still not be losing these lows. That's absolute fantastic. It's a fantastic amount of space for the bulls. Now moving on to Microsoft. Microsoft also getting to overbought conditions. Well, Microsoft's been in overbought conditions, but now really approaching the top of overbought conditions. RSI almost at 80 levels. And Microsoft is kind of not like NVIDIA, right? They don't get overbought that often. And when they do, it tends to be in a very bullish period of the cycle, which they currently are in right now. But the last time they got this overbought was back in 2021 to give you an idea of the market what we were in back there. So slight overbought conditions on Microsoft. After such a beautiful move higher now, right? Daily uptrend is now confirmed at this point. Any pullback just for a daily higher low, anything pretty much above 385, just looking for a daily higher low for further trend continuation. Microsoft looking very good, just a little bit overbought. On the weekly, everything's looking gorgeous as well after your weekly breakout of this area of consolidation. Beautiful bull flag at the top end right here. Weekly breakout confirmed. So Microsoft, if ever they next Tuesday for some reason have lackluster earnings or miss expectations or just the market just doesn't react to them properly and we dip a little bit, well, that's fine here, guys. On the weekly, so much space, anything above 365 just for a weekly higher low for further trend continuation in 2024. I think Microsoft's going to have a fantastic 2024 nonetheless. So very, very nice looking chart by Microsoft right here. Keep an eye. Earnings on next Tuesday. So not much price action for big tech guys, in my opinion, the ones that have earnings next week. And that's pretty much all of your big major players, right? Apple, Amazon, Google, Meta, Microsoft. It just continues. Now moving on to Netflix. Netflix just continuing the gains after their earnings rally. So up a 3.14%, touching the highs of yesterday after earnings. So the analysis remains pretty much the same here, guys. Netflix is in a beautiful new daily uptrend at this point. Any pullback from this move is just going to be looking for a higher low, anything above 476.59. Daily higher low for further trend continuation. Weekly is looking beautiful, guys. Look at this beautiful weekly uptrend right now. So if ever we lose the daily higher highs and higher lows, let's say the FOMC is bad and big tech earnings is bad and drags down Netflix next week for potentially a gap fill area, daily downtrend potential, well, weekly has so much space now, guys. Anything above 462, looking for a weekly higher low for further trend continuation. And we highlighted the areas of resistance for Netflix currently coming up. We're talking all the way up to about $585 is going to be the big next area of resistance for Netflix. You see it best here on the previous weekly chart. It's really a range. The range is we're starting to get in the range right now. We were in the range from pretty much 500. It's a very wide range, but this was the range that was plaguing the company. You can see how hard it struggled with this wide range, about 10-12% range back in 2020 and 2021. And now we're kind of getting back up there. So the top end of that range, the next target right now is going to be roughly 585, 590 in terms of that. And then we're off to the all-time highs. No red flags for Netflix as of now. Everything looking very, very healthy indeed. Now moving on to NVIDIA. NVIDIA, guys, almost putting in higher highs than yesterday, but not quite. And NVIDIA as well, right? So Netflix is overbought on the daily after the earnings. NVIDIA heavily just continues to stay overbought. RSI now at 83. So 83 is a very high read, even for a company like NVIDIA. You can see that when we get up to 83 in the past, it usually marks a slight temporary top in the stock. We had a couple back here in 2021. So this read right here, you can see was an 84 read. It was overbought for a while in the 70s leading up to this. And then when it hit its 83, 84 at around 209, it just had a little bit of a drop. You see the same thing happen over here. When we hit 84, that was the top end of this move right here, right? We came right up to this after this big move right here and then kind of consolidated sideways. So I'm not expecting a huge drop in NVIDIA, but it could just be time for the stock to have some daily consolidation. Hasn't had daily consolidation in almost 3 weeks at this point, right? So any daily consolidation is more than welcome by the stock. Keep an eye, hourly trend. Now lost in the after hours. We'll see if it persists through to tomorrow morning, down about 1.61 in the after hours. So if we do get an hourly downtrend into tomorrow, that will be the first one since this entire rise after the breakout of your zone right here. So that would be daily consolidation. Anything above 472.60-ish, just for a daily higher low for further trend continuation on NVIDIA. Everything looking gorgeous on NVIDIA after this weekly breakout. Tons of space on the weekly. So even if we lose this daily uptrend, bit of daily downtrend consolidation, weekly, just weekly higher low for further trend continuation. Earnings all the way up in February, so nothing very close for NVIDIA just yet. Everything looking very bullish though. Bulls still in the short-term control, but expecting a little bit of consolidation, guys. A lot of these things are getting to overbought conditions. Now moving on to Tesla. Tesla. After earnings, getting absolutely crushed, 12% to the downside. Very nasty move since the beginning of the year, guys, right? Since this Friday, December 29th, top to bottom candle, this is 31% worth of drop top to bottom, 264 to where we are now. But now we're approaching a big area of confluence. So we have our horizontal support line, 180 all the way down to about 170 is that previous horizontal support. And you have the downtrending channel line, which is also going to be acting as support too. Couple that with the fact that daily is absolutely crushed right now. The daily RSI is currently sitting at about 18. So keep an eye on this yellow line. You can see when we get all the way down to 18, sometimes it does mark a temporary bottom. So this was the last period in December of 2022. And then we had a nice significant rally. The previous times that Tesla got down to an RSI of 18, you have to go all the way back to 2019. And there as well, when we hit an RSI of 18, you can see that it was oversold for a while. But as soon as we hit that $18 level, it seems to be the breaking point. We had a nice little rally on Tesla. So not a lot of price points when the RSI on the daily gets down, smashed just this as much, but potentially a decent opportunity for a zone for a bounce. So we're going to be looking out for that hourly bounce. Obviously, your 4-hour trend, 4-hour RSI is absolutely crushed. Your short-term RSI is crushed. So all of your oversold conditions are being met currently. This is going to be a very juicy opportunity for me to be writing puts. I may be writing 2 or 3 week puts in the 165 area. I was looking at the contracts in the 165. They're presenting very juicy premium for the next couple of weeks. And 165 still represents about a 10% drop from current levels in a quick amount of time. So since we're expecting a little bit of recovery bounce here shortly, I do want to play a bit longer contracts further away. That way, if we do get a bounce, the premium's going to come out of those very nicely. So I'll be selling puts around the 165 range, looking to pocket all the premium quickly off of a short-term recovery bounce. But as a whole, guys, that's all we might get. So temporary bounce might be due, but that's all we're going to get. Still, daily downtrend just perpetuated by Tesla bears right now. As soon as we bounce on the stock, we're just going to be looking for a lower high for potential furtherance of the lower low conditions until the bulls can reset a daily uptrend to the upside. We're just going to continue this weekly push down, and it's getting fairly ugly. I do agree, but analyst expectations here, guys, if you want to know the true numbers, right? Tesla's only the auto business is evaluated at a fair value price of between $140 to about $150 for the next 5 years. That's only their auto business if they do nothing other than sell cars. So we're getting fairly close to Tesla's fair value at this point, representing a good buying opportunity. But like I said, guys, for the bounce to start, you need to see a reversal to the hourly trend change to the bulls. And then only then will you get a daily bounce underway. And then we'll be measuring the size of the bounce in relation to our most recent lower high, 216. How high can we get will determine if the bulls have a chance at resetting this to the upside and potentially start challenging the midpoint of this downtrending channel right there. But all in all, bears in full control on Tesla. Now moving on to Palantir. Palantir down again on the day here, guys, 1.73%. So after that 9-10% increase on the Monday, just complete sell-off back into your lows. And we were looking for the higher lows. Daily uptrend was set, looking for a higher low, anything above 1608, looking for the daily higher low for further trend continuation. But now, guys, the bears have taken back too much of this move. They've taken back over 80% of this move up, which gives the probability that they may just be able to set a lower high for lower low continuation and reversal of this daily uptrend back into a daily downtrend for the bears. That wouldn't be surprising. Why? Because we've always been in a weekly downtrend at this point. We were always looking out for the weekly high. The bounce was nice, but Palantir bulls just not able to follow through. So we'll continuously be challenging this area right here, 1609, lose 1609. It's a loss of your daily uptrend right there, puts the bears back in short-term control. And then we will be targeting the lows right here, 1550 down to about $14. For weekly downtrend continuation and into just continued monthly consolidation at this point at the lower levels. So Palantir not looking very good right now, but could represent a decent opportunity in the future to be writing some puts in the lower areas over here. Earnings in about 2 weeks time for Palantir. So keep that in mind for your Palantir positions. And now PayPal, guys. PayPal Investor Day, unfortunately, was not what people were expecting. So what they did do, a couple of main things that they did here. So here you go here, guys. I'll pull up one of the articles, right? So is this the article that I wanted to go over, or was the other one? PayPal stock drops after the products fail to shock the world. What a headline by the Wall Street Journal here, right? So PayPal stock fell 4% on Thursday after the payments company hosted an innovation day unveiling 6 AI-driven product enhancements. They may not have lived up to the expectations. Just a week ago, new CEO said that in his first public interview that they were going to shock the world with the presentation. He also said that PayPal would use its large sets of data and AI to drive sales for small businesses. So we might have expected here, we might have expected PayPal to potentially monetize client data, but that's actually not what they're doing at all. They included a couple new features here in terms of faster checkouts, in terms of cashback rewards for consumers and whatnot, and potentially revamping the app as a whole to make it easier for that checkout process, but really not a lot of fresh guidance into how this is going to translate to improved margins and improved EPS for the company. So I'll be looking forward to their earnings. Their earnings are pretty much coming in 2 weeks' time in February to really get a sense of what they're going to do with EPS and margins. We need to see cost cutting, and then we need to see how these new measures are potentially going to be translated into margin and EPS guidance, because it wasn't so clear from the event today. The event today was more in terms of superficial additions to the company, not so much monetization efficiencies that were brought forth for the company. And that's why the company reacted so negatively. PayPal has been all a story about increasing EPS and increasing margins to back what they were prior to the pandemic. You'll see that the margins have fallen significantly, and also EPS growth has been fairly stagnant in the company over the past couple of years, actually coming down from 2021. Now 2023, 24, 25 need to see that ramp back up in EPS, and only then will Wall Street be happy enough to increase their price targets on this stock, it needs to come from shareholder, it needs to come from earnings per share value, and it needs to come from margin increases. So PayPal coming down a little bit here today. So PayPal daily uptrend, still trying to set a daily higher low. Anything above 56.50 going to be for a daily higher low, but now the bears coming down a lot. Same story with Palantir that we just saw, right? The bears coming back 80% of the move. So the best chance that the bulls have is to set up a tightening range, kind of like they did over here. Tightening range at the top, tightening range at the top, right? Tightening range and then breakout. That seems to be the pattern that PayPal likes to respect. So we're going to try to do that again. We're going to try to set in a tightening range here. But what I don't like is the fact that not only did the investor day not live up to expectations, we respected our support level down here, 60 down to 58. Yes, but still no weekly confirmed close. We almost had it, guys. Still no weekly confirmed above our trend line. We briefly got above it and now looking back below it again. So I will need to see a daily trend change back above these levels right here, back into your $66, $67 levels, and get a healthy weekly green close above this downtrending trend line, which could send us, as I've been saying, guys, price targets for that would be $79 if that happens. In my opinion, not going to happen before earnings. So we'll see how they play out. PayPal still holding up decent, still holding this big area of support, which is your 60 down to $58. So we'll see how they do, but definitely not pleased that it gave back so much of the recent momentum. It's just a shame. Now, the best chance that the bulls have is to maintain a tightening range, but the bears, they set the daily downtrend. Unfortunately, that's the end of your weekly move, and then we'll be looking to protect the lows, 56.84. So getting kind of tight, getting dicey on PayPal, but still do like the valuation down here at these levels, that's for sure. So that's pretty much everything I had for you guys today. Hope you enjoyed today's video. So tomorrow we do have a few more earnings that we're going to go over. Actually, only one that I'm going to bring to you guys. Another one of my favorite stocks in the market, American Express. So that's going to be all we're covering tomorrow, and the portfolio update as well. So I hope you guys enjoyed today's video. If you did, consider dropping a like down below. It really helps me out for the algorithm, and consider subscribing to the channel if you're new as well. We'd love to have you here. Over 630 of you have subscribed so far, and I love each and every one of you for that. I really enjoy making these videos. And as always, guys, if you have any questions, I've been really appreciating the quality of your guys' questions that I get in the comments. If you have any more technical analysis, the stocks, any options plays whatsoever, or general macro comments, please leave them down below in the comments and we can go back and forth. I'll get back to you usually within the first 24 hours. So take care. See you guys after the close tomorrow. Happy trading and peace.